Hey everyone, this is Mikas coming at you with another market update video. It is currently May 13th, 9:26 in the morning, which means that the stock market, the New York Stock Exchange, is going to be opening in approximately 4 minutes. So today's analysis is going to be more or less building off of yesterday's. I'll just go over a couple of things, how I calculated them, see how the most recent price action has updated my I guess my outlook on the market in the near future. This is going to be another short-term analysis video focusing on intraday setups. So let's get started. Starting with some of the stuff that I was talking about yesterday, we have finally entered that shorting zone that I outlined yesterday. That was based off of this fib retracement from the local high that we put into the swing low that we had. And as you can see, that 0.5 to 0.618 area is always the golden area of interest. So on the most basic level of analysis, I would always outline this as a zone of interest. And as you can see, we have come up. We did pump up over this 0.236 level, which is a 0.236 Fibonacci retracement on a larger time frame. If you're interested where that came from, make sure to check out my medium time frame analysis video from yesterday. But as you can see, I did say I was going to be staying relatively bearish until we broke above that, which we did do here in the early morning hours. However, you can see we have pumped up to that 0.5 level and we are currently testing it. It seems like we're printing a little bit of a top, but that could also be a continuation further up, as this is the beginning of an area of resistance. I want to say I'm still going to be relatively bearish until we are able to break this red trend line once again and move above it, especially with this volume support. I do think that some more upside action is in store, as we do have a huge CME futures gap right above us. So maybe I could see us even, coming up right to the fill level, maybe filling it and then dumping after it. But as I said, traditional markets are opening in approximately 2 minutes, and I do like having a look at, futures. What is the stock market looking like, as that seems to be printing a top as well. If we go out to the ES mini futures, this is the S&P mini futures. We can see that on the daily, we did print in a huge red candle here, which we've done in the past and recovered from. So it'll be interesting to see how the market reacts today, as we are testing that 21 EMA on the daily, which is a critical bullish holding level. So I want to say if we start breaking below this, we're closing, today's daily candle below the 21 EMA, I would be more inclined or start leaning bearish a little bit more heavy. Going to a 4-hour time frame, which is a little bit more relevant for intraday trading. You can see we are below that 21 EMA, along with the, I think this is the 55 EMA, which are major, EMAs based on Fibonacci levels as well. So as long as we're staying below those, especially the 21 EMA, I am going to be, reserved bearish. I'm still, holding on to my bearish sentiment here. But moving back into the chart, another thing that I wanted to draw your attention to is the consolidation pattern. I might have briefly mentioned this yesterday. I'm not too sure, but in my opinion, if we draw, a consolidation pattern from wick to wick, so let's start with the wick over here to the wick over there, and drag it down to all these wicks down here using that little dump that we had as a basis. You can see that maybe a little bit further down, trying to get all those. Yep. As you can see, we have been testing a trend line, which I'm calling this parallel channel a number of times. So, we've bounced off of it. You could call this one big bounce, 2, 3, 4, with a fifth bounce. That's pretty rare that you get a trend line being tested that many times. However, we could see another test to the upside, which could easily be a wick. Maybe we slowly chug our way through here, maybe hit this volume support or volume resistance over here, and maybe wick up to the upside like we had over here. However, another thing of interest is, as I was talking about yesterday, is this 200 simple, moving average. It'll be interesting how the price reacts to this, as the last time we got a test of the 200, we got a hefty rejection off of it. So my first short entry is around this 200 moving average. Besides that, we can get rid of these EMAs. Like I said, I think a little bit of upside movement is definitely in store. And let's zoom out a little bit. Let's have a look at what the EMAs look like on the larger time frames here. We can see that, we've broken above the 21 EMA, so that's relatively bullish. I'd like to see that, come below, and we don't have any major moving averages above us. 8 hour, same thing. Yeah, I think the hourly is the only thing, yeah. The hourlies and the lower time frames are the only time frames where we have a little bit of resistance still above us in terms of moving averages. So I'm very interested to see how that reacts. The 30-minute, we've broken above most of our moving average supports or resistances there. Same thing with the 15-minute. Okay, so a measured move off of this break. As I was talking about yesterday, there was a little bit of a natural ascending triangle forming here between the 0.236 and this ascending support off of the parallel channel. If we wanted to get a general estimate of maybe how far this could pump, we take the width. Oh, no, that was the wrong tool. Sorry. We take the width of the channel and we print that on top of this. So okay, that would coincide with a move to about the top side of our channel, which makes a lot of sense if this is in fact us breaking out of this ascending triangle. So I don't, if price action itself, candle body start closing above this red descending resistance trend line and this volume support, I will be starting to lean a little bit more bullish. But until then, I do think it's very possible that we get further movement into this shorting zone, up to the 0.618, test this descending red trend line, maybe get a couple wicks up to fill the CME gap. But if anything moves past this 0.786 level or this the top resistive trend line of this parallel channel, I will start to be reassessing my bias. Talking about bias, let's have a look at the sentiment. Sentiment has been a little bit interesting. If we zoom out on the 2 daily to get a little bit more of a general picture, we can see that price action has been moving into the short range, which usually means you will see volatile spikes at the bottom. But on the other hand, if we look down here on the interest rates, longs haven't been increasing too much, whereas we've seen this huge activity with shorts. So I would call the sentiment leaning bearish, which makes me interested in always whenever I see sentiment leaning one way, I like to counter trend to trade it. But if we zoom in, just look at the 24 hourly, we can see that longs have been increasing more than shorts. So I would say this is a little bit more, you can see as a reaction as of 6 a.m. So about 3 hours ago, that's when most of those longs have been coming in. Same thing with, shorts have increased a little bit as expected, but like not as much as the longs. If this trend, if the longs continue to increase as people FOMO buy their way in as we're pumping up, I would be interested in a little bit of a bull trap. Sorry, a bull trap. It's early. I haven't had my coffee yet. A bull trap, especially as that would coincide with us moving into some of these heavy areas of resistance. So I will be watching the sentiment to see if the longs keep climbing. If they do, that is another point for a bearish scenario. However, right now on the a little bit on the more macro time scale, the shorts are still above the longs. So I wouldn't be surprised if price also moves to the upside, especially taking into account that CME gap. Anyway, long story short is I'm going to start building a short position, probably watching for a reaction off that 200 simple, followed by a reaction off of where the sell zone overlaps with the volume resistance, so probably around here, around 9278. And we'll see after that how price action is looking, how the momentum is looking. I'll probably be setting my stop loss somewhere above this predicted measured move, so probably around like 975. If you really wanted to push it, stay conservative, you could probably do 9860, somewhere around that 0.88 level. But quickly, let's have a look at what some of the oscillators are saying. On the hourly here, we can see that on the RSI and the Stoke, we are moving into that. I don't like calling it the the overbought zone, but we are moving to that upside. Same thing with the RSI. We are moving past those Bollinger Bands, so I would expect momentum to slow down a little bit as we're pushing into those Bollinger Bands. Especially after quite a big move like this, I would expect another hidden bearish divergence somewhere to indicate a top. And then we'll see if we consolidate along here, maybe into this trend line. I could see another push up to the top side, but other than that, this is technically support now. So there is, I guess, another little ascending, natural ascending triangle that's forming here. So that'll be interesting to see if that plays out. However, oscillators are, indicating a little bit of, an overbought position with a little bit of a relief needed. At least on the hourly, on the 2 hourly. Let's have a look if this wants to load. Hello? Oscillators. Yep, so you can see the same thing with the 2 hourly. We're moving into that Bollinger Band territory. However, we have been bouncing nicely off of that. I think this is the 12 simple or the 20. It's either the 12 or the 20 simple. So I would like to see, off a hidden bearish divergence, moving through that and then testing the bottom Bollinger Band support. And that's probably where I'll be looking for one of my take profits. I'll probably line up with about the top side of this volume support. Once again, this trend line is very important to watch. If you wanted to be a little bit more, risky, you could hold down to test of this trend line for your first take profit. But I would definitely recommend taking profit at this ascending trend line. Same thing. Looks like we've had a little bit, of a stalemate here in the overbought region of the 2 hourly, the 4 hourly, 4 hourly. We're working off of a bearish divergence. However, this hasn't exactly played out. We have been going to the upside, so the more times I see this printed, the more powerful, I guess, that becomes. So I'd expect definitely another one to be printed, especially as we're moving into that top Bollinger Band once again. Stokes are still to the upside. We haven't had a cross to the downside, but we are approaching that overbought region. So I would expect a little bit of a slowdown. I will be looking at some patterns maybe to draw in on the Stokes, because you can draw trend lines on the Stokes. Let's have a look at the 12 hourly. This is I know a lot of people that trade only the 12 hourly and do relatively well. So I would say this is actually relatively bullish on the perspective of the 12 hour. So this is the first time I'm seeing it. So this is actually, a counterpoint to my bearish bias. However, I am going to be still leaning bearish until we are closing above that major resistance. However, we have put in a hidden bullish divergence, which is indicative of a bottom, and we are working up off that. And you can see on a 12 hourly scale, that's a nice consistent uptrend, which is healthy. Also, the Stokes have crossed to the upside, so until those cross back to the downside, I am, I guess, a little bit less bearish, or I'm a little bit hesitant now. On the daily, we're still to the downside, working off of a bearish divergence over here. So that is a major point in the bearish camp still, as these aren't even close to crossing over. So this could simply be a little corrective move into this golden zone, followed by a reversal. However, we did put in that hidden bullish divergence here, which is indicative of a bottom. But maybe we come up, test this 20 as we saw on the 2 hourly. It can act as pretty hefty resistance, and then reject off of it again. So I will be watching that as well. I think that'll be it for today's video. This was just meant to be a short morning update. If you're interested in learning more, make sure to comment in the comment section below, and I can invite you to our Telegram group, where I'm usually available to answer questions or anything like that. So let me know if this helped. And if you are curious in more specific targets or measured moves, make sure to check out yesterday's intraday video, as that outlines specific moves using Fibonacci extensions a little bit more. Today, not much has changed overnight. I just wanted to update you on us breaking that ascending triangle to the upside, with another one potentially forming, pushing us up into that shorting region that I outlined yesterday. And keep an eye on this 200 simple and this volume support overlap region, along with the top of this trend line support, as those are all potential entries. And of course, the descending red trend line that we have from the last all-time high on the Bybit chart, along with the last macro top that we put in. Yeah, let me know if this helped. Make sure to hit subscribe and like the video to let me keep doing this. Let me know you guys like this, and I'll keep doing it. Thanks, guys.